In this lecture, we're going to be looking at trends and trend lines. So what are trends? Trends is basically a trend. You've heard of that before, right? There's a trend. Everybody going in a specific direction, right? So it's the same thing in currencies. A trend is when a currency is going in a specific direction. Now, you can have a uptrend, which means the trend is going up. You can have a downtrend, which means it's going down, or a side trend, which means it's going sideways. Now, an uptrend is characterized by higher highs. So you see here, there's a high. The next high is higher than that, and higher lows. So this low, you see that the next low is higher, and the next low is higher. So when prices are going like this, that's an uptrend, because each high is higher than the previous one, and each low is higher than the previous one. Downtrend is you have lower lows and lower highs. So you have a currency that's going down, and you see that each time there's a low, it's lower than the previous low. And the highs are lower than the previous highs. And side trend is basically where it's, equivalent. The highs are equal to each other, and the lows are somewhat equal to each other. So we're trading in a range like this. So you might have realized or saw earlier that on my USD CAD, I had some lines here. Well, you see here, you can see that there's, some type of trend since September 2018, right? Now we're in May 2019, and there's this type of trend here. You can see that every time we have a high, and let's see if I can draw on here, or even a low. Let's just look at the lows. Every time I have a low, okay, there's a low here, but look at the next low. The next low is a bit higher. And look at the next low. The next low is a bit higher as well. And look at the next low, also a bit higher. So it doesn't have to be perfect, but you can see that each low is higher than the previous one, right? And I can see also that the highs are higher, right? Each high is a bit higher than the previous one. So what does that tell me? That tells me we're in an uptrend. So the currency is going in a specific direction. USD is strengthening versus CAD. So it's taking more and more CAD to get you $1 worth of USD, right? And you might have heard the expression before, the trend is your friend, or don't go against the trend. Why? Because it's been proven that when something is going in a specific direction, it's more likely to keep going in that direction, right? When you have momentum, when you have a force in a specific direction, let's say a train going in a direction, it's hard for it to stop or go in the other direction. You need an opposing force that has, a force equal or bigger than that force to make it slow down or change its direction. And it's the same thing with prices. So when you see that there's a trend in a specific direction, you want to make sure that you're not going against the trend unless the trend breaks. Now, to be able to have a better idea on this, what we usually do is we draw a trend line. So a trend line is basically just a line that we draw on either all the lows or all the highs. I'll explain the highs later, but let's say on all the lows for now. And this trend line makes us really see the direction of the trend and when the trend breaks. So in this case, if I have a trend line here, you can see that whatever this product is, it's going to be supported. Why? Because everybody's looking at this trend line. So every time the price hits the trend line, people know that it's going to bounce off of it. And usually prices will bounce off a trend line. But when it breaks, it'll break and it'll go in the other direction. So if we go back to our example here, I can actually look at this chart and see, well, okay, can I connect these lows here? And I can take this line tool, trend line tool, and just see if I can connect them, right? And it doesn't have to be perfect, it's just an approximation, okay? And some people don't just draw one line. Some people like drawing two lines. So they'll take one line here and they'll do like a range. They'll take another line and they'll be like, well, because usually it's a range, right? It's not a perfect science. They'll be like, this is the support level, and they'll have like two lines. But for simplicity's purpose, let's just draw one trend line, okay? And leave it at that. You can tell yourself that, okay, well, because of this trend line, I see that the direction is upward. So the next time that this currency drops here and comes here, I'm going to buy it. Why? Because everybody else sees this direction and everybody else sees this trend line. So everybody else expects this currency to bounce off of this trend line. What does that mean? That means when the price comes here, they're all going to be buying, putting pressure on this currency and pushing it back up. So some people always wonder, well, do trend lines work because they work and it makes sense? Or is it because everybody thinks that they work, and because of that, they all place orders on these key locations, and because of that, it works? So is it really something that works, or is it a self-fulfilling prophecy? Everybody says it works, so everybody applies it, and because everybody applies it, it works. And we don't know. I think it's a combination of both. Obviously, the impact of everybody following trends and using them has an impact on it, but also there's something to it as well that makes sense. So we'll be drawing trend lines to be able to look at the direction and see if it's a good place to buy or sell. In this situation, if the currency comes here, I know it would be a good entry spot for a high probability trade. And if the price breaks it, I would not want to go long this currency because there's more likelihood that it breaks down. So this is what a trend line is. In the next lecture, we're going to explain support, resistance, and channels.